makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. French President Emmanuel Macron announces a snap parliamentary vote in a bid to stop his right-wing rival Marine Le Pen after a crushing defeat in the EU election. In Germany, Olaf Scholz's Social Democrats suffer a record rout as the AfD surges in the polls, and the political shockwaves have rocked the markets, the euro slumping, European stocks falling, with France's CAC 40 actually leading the losses. Now let's take a look at these European markets map, because the euro is also hitting 1 month low after a lot of these stocks have dropping. Now, if you look at exactly the concern out there is, I guess, gains for the French far right in the vote for European lawmakers, because they prompted Macron to call the snap election as he seeks to halt the rise of his rival Marine Le Pen. A lot is in play in terms of maybe some of the financial stability and some of the things that we should watch out for. Stability, again, is the one thing that investors like. Now, the euro was already on the back foot heading into a week after suffering its biggest loss in almost 2 months on Friday, and that's as we had stronger than expected U.S. jobs data that lifted the dollar. Some of the other things that we're watching out for, apart from, of course, these results coming in and the German 2-year 3.08. The French 2-year 3.194. Again, we're trying to figure out what this means for future elections and some of the policies that European parliamentarians will try to influence back home. Some of the other things is also we continue the focus on the Fed as they update their rates forecast on Wednesday, and traders being a little bit less optimistic about the prospects for policy easing. So we'll have a full roundup of what's happening with the euro and what's happening with some of these yields, not only Bund, but also the French 2-year yield. Now, the French President Emmanuel Macron has called a snap election following his party's crushing defeat in Sunday's European parliamentary elections. His Renaissance party came a distant second to Marine Le Pen's far-right national rally.
This is a serious and weighty decision, but above all, it is an act of trust. Confidence in you, my dear compatriots, in the ability of the French people to make the just choice for themselves and for future generations.
Well, his German counterpart, Olaf Scholz, did not fare much better, with his Social Democrats projected to suffer their worst ever performance in an EU election. Now, Bloomberg's Oliver Kirk is in Berlin, and he has more on that. But first, let's also get to Caroline in Paris. So, Caroline, what markets are worried about? And I guess Macron's position at the moment as head of state will not be directly affected. What could be affected is the ability to push through legislation.
Yeah, I mean, Macron's response last night was a shock in response to another shock. So he had not much choice after the results in these European elections. 32% for the National Rally candidate Jordan Bardella. That was more than twice the score of Valérie Ayé, the candidate of Emmanuel Macron's party, who's been struggling to exist in this campaign. And in fact, Jordan Bardella did call Emmanuel Macron to encourage him to call for snap elections. The opposition said Emmanuel Macron shouldn't have listened to what Bardella is asking for, but he didn't have much choice here. He had to listen to the French. He already tried to change the prime minister. He already tried to reshuffle the government several times. This time he had to show that he is taking into account these election results. And you can see the headlines of the French newspapers this morning. Coup de tonnerre, coup de poker. Really, everyone considered this is going to be a gamble, but he didn't have much choice.
Yeah, so Katharine, I guess the question is, do we think that the gamble is more important than the idea that Marine Le Pen has done so well? So what are her ideas are very popular, and does that translate through the rest of Europe?
As you know, Francine, Marine Le Pen has moved away from her idea of Frexit, a French exit of the European Union, because she knew that this is a turnoff for a big part of the electorate. She has also trying to break up with the AfD in Germany recently, a couple of weeks ago, saying she couldn't accept anymore the comments from the AfD about the Nazis not being all criminals. So she's trying to detoxify her party. She's trying to normalize herself, and as a result, she is appealing to a bigger part of the French electorate. We'll see how this translates for these snap elections, because the legislative elections are a bit different from the Europeans. It's a two-run system, which usually puts the far right wing at a disadvantage. But clearly, if there is a majority at the National Assembly for the National Rally, Macron will have to find some alliances, or perhaps even leave a cohabitation and have a prime minister who is not from his party.
Katharine, thank you so much. Katharine Conan there in Paris with the very latest. Now let's also go to Berlin and Bloomberg's Oliver Crook. Ollie, how much of a setback is this for Olaf Scholz? And actually, does it really underscore also his increasing difficulty that the German government is facing in trying to lead European politics?
Completely, Francine, and I think that that's sort of the two parts of this, right? The first is just how is this a referendum on Scholz and himself, and maybe the question about Germany's position in leadership of Europe, right? Let's also not forget, though, that the biggest winner last night was the CDU, the traditional right of Germany, Merkel's party. They took 30% of the vote, but what everybody was very sort of interested in finding out is how the AfD would do, and the AfD, Alternative for Deutschland, the extreme right of Germany, did 16%. That's better than Scholz's 14%, which he had the sort of worst outcome ever for the EU Parliament. And for many people, that was actually a lot better for the AfD than had been anticipated. They were beset by all of these sort of controversies that Caroline alluded to, but also a number of aides being investigated for giving information to Russia and China. And all of this put together, when you look at the actual Scholz coalition and how they did in this vote, they only got 35% of the vote, which is really very, very little when you consider that obviously they got more than 50% for the national election. What I think, Francine, this calls into question, and the real question that this is who is going to pick up that leadership over in Europe, because both in France, both in Germany, you have basically national votes that have given a rebuke to the ruling party and sort of undermined their legitimacy in some way. And Macron's solution to that problem is, hey, listen, I'll call a legislative election. Maybe the French people are not willing to put in the national politics what they're willing to put in EU Parliament. Scholz does not have that lever to pull. So it will be interesting. And also the question is, of course, Francine, the votes are one thing, the number of MEPs, all of that's important. But as you know, Francine, in European politics, vibe is a big sort of quality and momentum, and Giorgia Meloni's got it right now.
She does have it. She seems to have solidified power. But actually, Ollie, overall, with some of these far-right parties definitely gaining seats compared to what they did 5 years ago across Europe, but does it mean that it could change, the policy agenda so that migration comes on top and actually anything green is all the way at the bottom?
I think that that's sort of generally kind of how we see things going to a certain degree, right? Greens, certainly the Greens have got the biggest rebuke here in Germany. They got absolutely crushed. 2019 was really the green wave across European Parliament. We saw that has basically all but sort of evaporated to a large extent. The question is going to be how much difference will that actually make to the green agenda? Still, the center right and the center left are broadly speaking on board with the green agenda. And again, so you may have a little bit less money going there. There are questions about, for example, combustion engine cars. Could they push out the sort of deadline for that? That is one thing we'll be watching very closely. But again, this is just sort of a referendum on these mainstream politicians who really need to bring into question kind of what their effective messaging is. And yes, Francine, inevitably you're going to see immigration float up to the top, and maybe that's something that maybe closer to the center right might be on board with.
Oliver, thanks so much. Oliver Crook there in Berlin. Now let's get more from Bloomberg's EMEA News Director, Rosalind Matheson. Ross, thanks so much for coming on. So, I mean, this kind of changes everything. Why do you think that the far right is so popular in Europe?
Well, it's interesting because we've seen a lot of traction for the far right from these elections in France and Germany, in particular, far right, hard right, splitting hairs, whatever you want to call it. But, as Oliver was saying also, the centre did hold in all of this. They are still the biggest bloc in Brussels. And the question is, how much do people vote one way in an EU election? Can you make a protest vote? And then how do you vote if it's actually a national election with your own economy, your own domestic policies at stake? And that's clearly the gamble that Emmanuel Macron is taking. But what they've really done is collectively tapped the mood around things like migration and the economy and tied those two things together. So linked migration to the state of the economy. And we're seeing that also in the UK election as well, which is coming up in the middle of all of this. So you're seeing that debate around migration, economic status, people feeling that they're not better off, even if the economy is actually doing better. So that gap between reality and expectation that governments are struggling to deal with, and that's really what they've tapped. But an important thing to note in all of this is these parties have individually done well in this election, pretty much in line with what polling was saying, but they don't get on. They're actually not a united bloc. These far-right, hard-right parties in Italy, Germany, France and elsewhere, they're not a unified entity. In fact, they're quite sort of like squabbling cousins in a way. So can they take this collectively with momentum, or do they have only their sort of domestic agenda really at hand?
But so, Rosa, what do we know about Marine Le Pen kind of reached out to Giorgia Meloni's party? Are they able to form a coalition in the European Parliament, or is that too soon? Because the way it works is basically the right tries to get together to counter some of the centrists and the left.
Well, possibly, but there's not a lot of good sort of like collaboration that's been going on there. And we've seen that very publicly in a way from the comments that Giorgia Meloni has made. She's really tried to shift herself away from these tags again, far right, extreme right, hard right, and sort of say that, she's centre right in a way. And you see Marine Le Pen doing the same, but very much they're trying to distance themselves from each other in a way and sort of position themselves as a centrist leader in their own country. So is there room for collaboration, perhaps on some issues, but they're also competing?
So, Roz, what do you think Emmanuel Macron's gamble is? Is he trying to, see whether that vote for Europe that sometimes does feel far also translates domestically, or does he also think, well, look, if there's some kind of power-sharing agreement with the far right, let's see how good they are before there's a presidential election in 2 years?
Yeah, it seems to be a bunch of calculations here. One could be that they don't do as well in the election that mirrors their EU performance, because we heard again it's not so straightforward when it comes to a legislative election in France. There's also that. There's the aspect of do they do well, and then how do they go? It's one thing to be on the sidelines in opposition. It's another thing to be actually having to set policy, navigate Parliament and be on the hook if things don't go so well. So perhaps if they do have that majority in France and they are setting the agenda, they'll have, 2-3 years before the 2027 presidential election, and that might set the narrative against them in the run-up to that, because the one thing Macron is really, really thinking about in the end is his legacy. Yeah. What happens after 2027, and does he want his legacy to be really the taint of Marine Le Pen?
Thank you so much. As always, our Bloomberg EMEA News Director, Rosalind Matheson. Now, coming up, the euro is in focus, of course, after the French president calls for a snap election. We'll look at the market reaction next, and this is Bloomberg. Now, the euro weakened to its lowest level in a month after the French President Emmanuel Macron called for a snap vote in the wake of his party's crushing defeat in the European Parliament elections. Now, European shares are also lower, with the CAC 40 leading the losses. Well, I'm now joined by Katharine Neiss, PGIM fixed income chief European economist, and Bloomberg's Justina Lee. So thank you, Justina. Thank you, Katharine, for coming on. I mean, this is quite a big market, more of a market event than we thought it would. What are markets interpreting this as?
So I think the big concern is, and what markets like to see, is unity in Europe, deeper integration, more agreement around funding for common European goods. And so this election at the margin makes that prospect a bit more uncertain. And that is what I suspect markets are reacting to. Overall, the election results, I think, were pretty much in line with expectations. But of course, the surprise is what we're seeing in France.
So, Katharine, again, is there a concern from the markets that some of the legislation that President Macron could have pushed through may not happen if he loses badly in Parliament?
So I think, what we're seeing now is really something that has been sort of writing on the wall for France for quite a number of years now. Macron originally had campaigned on a platform of reforms, but also around fiscal discipline. And we've seen those reforms, but we haven't seen a lot of the fiscal discipline. And of course, in the meantime, we've had a pandemic and we've had Russia invasion of Ukraine affecting energy prices. But this fragmentation politically is just making the prospect of any sort of fiscal discipline in France look ever more unlikely. And so ratings agencies have been downgrading France. We had one just a week and a half ago or so from S&P. And so this bigger picture of concerns around the trajectory of France was there already before the outcome of today. This is just what's crystallizing, really, I think, some of those concerns.
And so, Justina, when you look at, what do you find more surprising? Is it the move in euro, which is also because, of course, what happened with dollar with that jobs report last week? Or is it, that the market is actually reacting to some kind of political news, which we haven't seen for the last 2 years?
Yeah, it's kind of funny because I guess we saw that with emerging markets, but sort of like coming to developed countries as well. And I think this euro move is kind of interesting because, like you said, on one hand, it is a reaction as well to people kind of pushing back further the prospect of a rate cut in the U.S. while we've already got this kind of opening cut in Europe. And I think kind of these election results and the weaker euro really puts the ECB in a bind because the currency weakness will have an effect on inflation. And so that will have implications for what they can do further down the line, especially with kind of actually some data showing that inflation might not be as weak as we expected in Europe as well.
And Katharine, does it impact actually what the central bank does? The ECB kind of, they were the first ones to cut, certainly amongst the Bank of England and the Fed. It happened without a big hitch. Does it put the next ones in play?
My sense from the tone that we got from the press conference is that they are very keen to at least give themselves the optionality of delaying any further cuts by a bit more than perhaps what they had been sort of signaling and signposting, not that long ago. I think Justina is very right in saying that, at the margin, of course, a weaker euro is going to be more inflationary. That said, the euro area is a very large economic region. It will help on the competitiveness front where we've seen manufacturing is really struggling. And so, whether this is enough to turn the needle, I think remains an open question. But the prospects for sort of supply side reforms, I think, has much more of a question mark on the back of these election results.
And what does it mean for your appetite for some of the, the German bunds? We were looking there at French bunds or even Italian BTPs.
The remarkable thing is coming out of the pandemic, Europe has, big picture, had pretty much of a smooth ride when it comes to monetary policy setting. We've seen peripheral spreads narrowing. There's been a bit of a feel-good factor. And my sense is that it's going to be a bit more of a bumpy ride, not just for core countries like France, but even for Italy. They've got a tough budget coming up this fall. And so it's going to be harder for markets to digest some of this, I suspect.
So, Justina, do you look at gold or do you look at VIX?
Yeah,
maybe both.
Yeah. Gold is kind of funny, right? Because last week we got the news that China has stopped buying gold after this long, kind of shopping spree. So I think the implication there is that are we going to focus more on the fundamental drivers of, precious metals, especially with kind of, the Fed possibly, holding for longer, but also pushing back those rate cuts.
Justina, thank you so much. Justina Lee and Katharine Neiss, PGIM fixed income chief European economist, stays with us. We have plenty more to talk about. This is Bloomberg. Welcome back. We're with Katharine Neiss, PGIM fixed income chief European economist, who's still with us. Katharine, when you look at the driver for the market forward, what is it?
It's a really difficult question. My sense is that something would need to happen to trigger a significant move away from the consensus. There is now a strong consensus of this higher for longer and, very small probability of risks on either side of that, either the market seeing the prospect of rate hikes from here or indeed, a path of very, very aggressive cuts that we were expecting, not that long time ago. What does that reflect? I think the sense is that the bar is very high for central banks to raise rates from here. We are seeing an easing. We have seen some cooling in the real economy, inflation coming off. But that said, there's no sign that we're on the brink of some sort of a significant slowdown. And with resilient labor markets and space for central banks to cut, that could blunt any downside. So very strong consensus for this higher for longer. Something would need to trigger that. Is hard to predict what that could be.
And one of the most interesting, and it's very well said, and again, there's this idea that actually higher for longer doesn't necessarily mean that, you know, the world ends, and that's a big shift from 7 months ago. BOJ, extremely interesting. What are you expecting?
So I would not be surprised to see them do, you know, just dipping their toe into the water of quantitative tightening. One of the really fascinating things, for me at least, has been the experience that we can draw on balance sheet policies from all the other central banks coming out of the pandemic. Before the pandemic, we only had one observation coming from the Fed of what was happening on this in terms of balance sheet contraction. Since then, we've seen all these other central banks, Bank of England, ECB, the Riksbank, you know, you name it, lots of examples of quantitative tightening. And what we've seen is that it's happened much earlier in the interest rate hiking cycle than I think what people might have expected, and it's been more aggressive. So don't be surprised, I think, that the Bank of Japan follows that playbook and actually starts to shrink its balance sheet pretty early in this hiking cycle, and having dipped its toe in and seeing that, you know, it can be digested or in an orderly fashion, it could become more aggressive as we progress through the year. But let's see.
Let's see. Katharine, thank you so much. As always, Katharine Neiss, PGIM Fixed Income Chief European Economist. More to come. We're live in Brussels next. Now, the French President Emmanuel Macron announces a snap parliamentary vote in a bid to stop his right-wing rival Marine Le Pen after a crushing defeat in the EU election. In Germany, Olaf Scholz Social Democrats suffer a record rout as the AfD surges in the polls. Plus, the political shockwaves have rocked the markets, the euro slumping while European stocks are falling, with France's CAC 40 leading the losses. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So let's quickly have a look at the European markets map and some of the stocks that are dropping after that EU vote. Now, there is a question mark, of course, when you look at some of the politicians and political agenda in France about what happens next. So President Emmanuel Macron has plunged France now into political uncertainty with a snap election or a slap legislative ballot that restages his perennial battle, really, with a far-right rival, Marine Le Pen. So we're seeing the CAC 40 down some 1.7%. That's a lot more than some of the other markets across Europe. And again, I think there are question marks in the market if his position, which frankly is not directly affected by the upcoming vote as head of state, but whether that will affect his ability then to push through legislation. So that will be something that we need to keep a very close eye on. So voters in France and Germany have dealt a massive blow to their leaders following the European Parliament election on Sunday as far-right parties made gains. Now, the results dealing a blow to the French President Emmanuel Macron, who, as we were just saying, called for a snap election.
This is a serious and weighty decision, but above all, it is an act of trust. Confidence in you, my dear compatriots, in the ability of the French people to make the just choice for themselves and for future generations.
Now let's get more on this with Bloomberg's Stephen Carroll, who's in Brussels. So first of all, Stephen, I think we need to remind everyone that, you know, their performance of the far right was more or less expected. And while Macron and Scholz both suffered also reverses, the far right parties only made moderate gains across the bloc. So why did Macron call the snap election?
Well, it's a great question and really something only the president can answer. But as you say, it wasn't that much of a surprise looking at the numbers. So what Emmanuel Macron now is gambling on, or some are describing it as an audacious, bold step, is trying to consolidate his grip on power or give the electorate the choice of letting the National Rally, or putting the National Rally into a form of power in the French government. Could it be a return, Francine, of famous cohabitation that we last saw under Jacques Chirac in France in the 1990s, where you have a president from one party and a prime minister from another? That could be the scenario if the National Rally party came out on top and had a majority in the next parliament. Macron's party, although they are the biggest party in the current parliament, they don't have a majority, which makes policy making very difficult. We've seen Macron having to use his presidential override to get some laws passed by decree in France. So there has been a degree of policy stagnation under this administration since the last elections in 2022. So what Emmanuel Macron is doing now is throwing it open to the electorate and saying, you can make your decision. What we could end up with, and this is partly to explain some of the market reaction we've seen, is a situation where very little gets done indeed, which is the usual situation when we have a cohabitation situation with, as I say, a president from one party and a prime minister from another.
So, Stephen, what about the far right elsewhere in Europe?
Look, it's a different story in each country as well. You mentioned Germany there. Olaf Scholz, his party certainly taking a kicking with the worst performance they've ever registered in a European Parliament election, although it was the centre-right CDU that actually came out on top in the German European Parliament vote. The AfD, the far-right party there, certainly gaining ground and picking up seats along the way, and that's part of the story of the punishment of those parties that are in power in Germany at the moment. The Greens, notably, another trend that we're seeing across Europe too as well. If you look at Italy, the party of Italian Prime Minister Giorgia Meloni doing extremely well, picking up a massive amount of the vote share compared to their last performance in 2019 as well. We've been discussing what this means for the European Parliament with the president of the European People's Party, Manfred Weber.
The key question is now, are we ready to come to a quick decision-making process? And again, as EPP, we are the winners, but we are ready for a reasonable compromise and a coordination in the center of the landscape to avoid that right extreme and also left extreme gets really influence in European decision-making process. Europe must be governed from the center, and the EPP is doing so.
And look, all of the parties that are part of that centrist coalition very keen to point out that they did win. They maintained their majority. The three parties that supported Ursula von der Leyen to become European Commission President in 2019 still have a majority in the European Parliament. That bodes well for her as she's seeking a second term. But of course, that's in the gift of the leaders of the 27 members of the European Union. They're the ones that put forward a candidate to be voted on in Parliament. They're starting those discussions a week from today with their first informal dinner on the issue.
So, Stephen, the centrist coalition held. Does that mean that Ursula von der Leyen will get another term?
Not necessarily, and that's where it gets a little bit more complicated. So first of all, you have the European leaders factor. Perhaps they might choose somebody else, like they did when they were supposed to choose Manfred Weber in 2019, and Ursula von der Leyen was brought in as a surprise candidate. That's a likelihood, doesn't look very likely at the moment, but it is something that could happen. Then it's a question of whether Ursula von der Leyen can ramp up the support that she needs to get the majority, the 361 MEPs she needs to vote for her in the European Parliament. If you put the current parties together, she has it on paper, but not everyone in the European Parliament votes the way they're supposed to in these sorts of votes. So already we were having conversations last night with one of the Greens lead candidates, Bas Eickhout, as well, about whether or not they could support Ursula von der Leyen. He seemed open to the idea. Manfred Weber from the EPP, less so, it had to be said. He pointed to some of the Greens' voting record on that as well. But the horse trading begins now. Ursula von der Leyen is meeting her current partners to try and secure their support starting today. And we'll also see a big reshuffle of some of the parties in the European Parliament as well that will shift the political landscape here in Brussels, and that'll be the next step to try and watch to see whether or not she can make it to that magic number of 361 when the European Parliament's due to vote in July.
Yeah, a lot going on. Stephen, thank you so much. Stephen Carroll there with the very latest on these EU elections. Now, the Israel Prime Minister Benjamin Netanyahu's major domestic rival has resigned from the nation's emergency government over the handling of the war against Hamas. In a televised news conference, Benny Gantz said Netanyahu was preventing Israel from achieving true victory in the war, saying politics was getting in the way of strategic decisions. Let's get more on this with Bloomberg's Galit Alstein in Tel Aviv. Galit, thank you for joining us. So what does the departure of Gantz mean for Netanyahu, and can his government actually stay in power?
Yes, so his government can, Prime Minister Benjamin Netanyahu's government can stay in power at this time because it holds a 64-seat majority in Israel's parliament. So Gantz walking out of government does not mean that the government collapses at this time, and the ruling coalition will remain in power, at least for the time being. It does still need to navigate some pretty explosive topics that are on the table, like the Israel's budget for the year 2025 that now needs needs to be written up and approved in government and in parliament. And this is a difficult budget that will need to accommodate the vast war expenses that Israel has at this time. There's also a big domestic issue of conscripting Jewish Orthodox men into the Israeli military. This is a topic that Israel has been dealing with for many years, but it is now more relevant because the country needs more soldiers as the war in Gaza continues. So it will have some pretty tricky subjects to navigate over the next few weeks and months, but it should be able to stay in power at least for the foreseen future.
So, Gallet, what was the core of the disagreements and what will change once he's gone?
Right. So I think that Gantz was seen by both domestic and international observers as a very moderate voice that kind of balanced out Prime Minister Netanyahu's government, which is comprised of 5 parties that are all very right-leaning nationalist parties. Some are Jewish Orthodox parties. And Gantz was considered to be a moderate voice among them. Now, some would argue that over the past months, his voice, this moderate voice, was not influential enough and was not heard and was not making a difference in cabinet. And this is the reason that he chose to resign to begin with. So that, it remains to be seen. There is a chance that international pressure on Israel will increase now because the U.S. envoys that have been coming to Israel have kind of seen in him someone who is easier to talk to, a more perhaps reasonable political persona that maybe aligns with their views more than Netanyahu and his other coalition partners. We have U.S. Secretary of State Blinken visiting Israel this afternoon, so it will be interesting to listen to his tone of voice during this visit, and of course his tone and others in the weeks to come ahead.
So, Gallet, does this mean that Israel could also be headed for an election sooner than 2026?
So not necessarily. Gantz, in his televised statement yesterday, called for an early election as early as this coming fall in several months. But in order to achieve that, Gantz needs a majority in parliament, which he does not have now. And in order to achieve that sort of majority, he would need to pull at least 5 members of Netanyahu's ruling party, the Likud, and have them work with him to promote an early election. And there is very slim chance of that happening now. So at least for now, it doesn't seem like Gantz will have the majority in parliament to promote an early election. Now, the bottom line is that if Prime Minister Netanyahu can survive this seat, it's called the summer seat of parliament, which ends at the end of July. If he can sustain his government until the end of July, then his government is probably safe until the end of this year and well into the first quarter of 2025. So we're not seeing an early election at this time. However, it does need to be said that public protests against Netanyahu's government are ramping up, and we don't know how that will play out. For now, it seems that Netanyahu, if he can survive until the end of July, can probably survive until the beginning, at least, of 2025.
Okay, Gallet, thanks so much. Gallet Alstein there in Tel Aviv with an interesting roundup of the news happening, of course, in the Middle East. Now, let's also turn to the Russian invasion of Ukraine. The Kremlin has forced thousands of migrants and foreign students to fight alongside Russian troops. That's according to European officials. Now, Bloomberg understands that Moscow has increasingly threatened to block visa extensions for African students and young workers unless they agree to join the military. Let's discuss all of this with Bloomberg's Alberto Nardelli, who worked on the story. Alberto, of course, first of all, thank you so much for coming on. So sending migrants and students in battle under duress seems like an incredible, topic. Is there a precedent for this?
It does seem like something you would hear like hundreds of years ago, maybe. This tactic started with the Wagner mercenary groups. You'll recall during the battle for Bakhmut that they started to enroll prisoners, and amongst those prisoners there were also migrants and foreigners. What is happening now, as Russia's losses mount, is that they're expanding that tactic. So they've expanded it to at least 21 countries. Some of these individuals will be joining the military for monetary reasons, or they're being paid to join the military. Other tactics that they use, they look in the databases for people who in the past applied for work in Russia. They are being lured to Russia with the promise of a job and then being forced to join the military. And thirdly, which is what our story focused on, young students and workers who are already in Russia and have visas. Moscow is threatening them with deportation. And obviously, once they are in Russia, it's very hard to resist those threats.
So, Alberto, does this really signal how much pressure Russia is under to find people to sell on the battlefield?
Absolutely. And the issue of manpower and the lack of manpower, the more the war grinds on, has become a significant issue, not just for Russia, but also for Ukraine. Recent estimates by the British Defence Ministry say Russia has lost about 500,000 people since the beginning of the war. Currently, that rate is at a record high. Last month, the UK says Russia lost about 1,200 people on average per day. So Russia has to find people from wherever it can, because it's also worth remembering that Vladimir Putin has tried to resist a full-on mobilization of the population. So he's trying to get people to volunteer to join the army and to get people from wherever he can.
So, Alberto, ahead of the G7, could the story also help persuade some countries from the global south to offer more support to Ukraine?
I think that's a very good and very complicated and nuanced question. I think some G7 countries are discussing sharing what they know with African countries about these tactics. Some global south countries have been more sympathetic to Ukraine and have called out some of these practices. India last month said that it had busted a human trafficking network and some Indians had been sent to fight under duress. The challenge, I think, for Ukraine and its allies, if we look at the global south picture comprehensively, is that there are some key countries, such as China, for example, who claim to be neutral while they are supporting Russia with technologies and dual-use goods. And before wanting to participate in any peace talks, they say Russia has to be on board and so on. So there are lots of bigger issues at stake where these countries, despite these stories, are sticking to their overall position.
I guess it's never really forthcoming or easy. Alberto, as always, thank you so much for coming on.
Thank you very much for
Alberto Nardelli there with the very latest on this pretty incredible Bloomberg scoop. Now, coming up, Apple's Developers Conference will show whether it can be a force in the AI industry. We'll look at what to expect from the event next, and this is Bloomberg. Welcome back, everyone. So Apple set to lay out its vision for AI and at its annual Worldwide Developers Conference later today. Well, Matt Bloxham from Bloomberg Intelligence is here. Matt, there's always so much excitement for these kind of events to figure out the latest gadget and some of the things they'll put in place. So this is what's most in focus for you today.
Yeah, I mean, obviously the whole AI topic is the big focus, what they're calling Apple Intelligence. And this is them essentially laying out, this is how we're integrating generative AI into our suite of software and what that means for the kind of hardware roadmap. So it's interesting, we're expecting that these features will only be available to the iPhone 15 Pro, so the most advanced handset you can get today, and everything beyond that. So one of the big question marks is going to be, is this going to be enough or the start of a new so-called super cycle? So, you know, people have been holding on to their smartphones for longer. That's not great for kind of revenue. And if people start to think, actually, I really like this stuff, I want to be able to access this stuff, so I'm going to have to upgrade my smartphone, that could potentially kick in from September when they launched the iPhone 16.
But Matt, so what kind of stuff could we see in it? I mean, it's like I'm talking to my phone and it does stuff for me?
That's part of it. I mean, I guess the issue here is there's going to be lots of different announcements, and so there's not going to be one kind of killer thing. What part of it is this OpenAI partnership, which will be about kind of a chatbot kind of interface. Siri is going to get an upgrade. There's going to be lots of kind of summarization tools. So Safari, which is their web browser, will kind of do more intelligent summarization of things you've searched for. There might even be a kind of AI prompted reply for emails and messages, that kind of thing. So lots of different features in all of their familiar apps, just kind of enhancing them, elevating to the next level, kind of tweaks that people think, actually, that's quite a neat feature. I'd love to be able to access that.
I mean, I'm still thinking whether I should upgrade quickly. NVIDIA, I mean, it was a big move, right, the split?
Yeah, I mean, the split 10 for 1, I mean, the share price is up to $1,000. That makes it less accessible to retail investors. They want to make this the kind of broaden the appeal. Everybody's interested in how do I play the AI game. Obviously, if you're a professional investor, it's fine. But if you're a retail investor, maybe $1,000 share price makes it a bit inaccessible to you. So this maybe broadens that appeal of the stock.
Matt, thank you so much, as always, for joining us. Matt Blockson there from Bloomberg Intelligence. Now, coming up, growing concerns about a brain drain at the New York Federal Reserve and how its influence is waning on Wall Street. We'll bring you the details next. It's our big take, and this is Bloomberg. Now, there are growing concerns about a, quote, brain drain at the New York Federal Reserve under President John Williams. At least 11 senior officials with more than a decade of experience each either left or retired in the past 2 years. Former officials, traders, and economists are worried about the exodus of talent since Williams took over the bank in 2018. Well, let's bring in Bloomberg's Alex Harris, who's been key and instrumental, of course, in this big take report that we have out today. Alex, thank you so much for joining us. So first of all, how much of a worry is this? Because the New York Fed has played an instrumental role in steering the financial system through crises.
Yeah, so I'd like to start off by saying just at least they're still doing their job. Obviously, we're not dealing with any major crises. Things are continuing to run. Markets are still functioning. We're not really seeing these egregious effects of quantitative tightening yet. However, where people are concerned is that the New York Fed has kind of always been a thought leader in this space, in the intersection of monetary policy and markets. And I think over the last few years in particular, we're starting to see less of that influence. And now you're kind of seeing it spread throughout the system with Lori Logan's elevation to the Dallas Fed role, and then Goldman Sachs's Beth Hammack being named the president of the Cleveland Fed, that people are wondering, like, okay, they can't implement this. They can't pick up the phone and call New York. So yes, it's nice to hear. It's nice to hear from people like Lori. But everyone goes, well, what does New York have to say about it, given that they are the bank designated for carrying out and implementing these policies?
So, Alex, what exactly is the worry that people leave, and so you kind of miss, a deep understanding of the markets if there's a crisis, or is there worries about the way it's actually being dealt with?
I think there's concerns about, are the right things being monitored? Are they being aggressive in what they're monitoring? 2019, they still had a very deep bench. They still had a lot of experience there, and they still missed the blow up in the repo market. So, I mean, that tells you something about how quickly things can turn in these markets, especially in the very front end and when it comes to funding. But the other problem is that what has left are the people who look for sort of these dark spots, who look for these dark corners of the markets where, you're supposed to be a little bit maybe cynical and thinking that of the worst in everything. And you need those people. You need those people to come in. But you also need the people that know how to implement these tools. And we've lost a lot of those crisis fighters, the people who can get these facilities up and running, that know exactly what need to be done. And that's what you're really missing here. And even if they're training and you train the next generation, if there's nothing incentivizing them to stay and they leave, then, you're really lacking there. And that's what's also concerning people.
Alex, thank you so much. Of course, great reporting from you and the team on today's Big Take. Now, we are also looking for a euro and some kind of market reaction from the fact that French President Emmanuel Macron has called early elections, legislative elections. Now, the euro falling to its lowest in a month after French President Macron called this vote in the wake of a suffering crushing defeat in the European parliamentary elections. We'll have plenty more on that throughout the day. And this is Bloomberg.